Hi, this is Jason Fielder with ForexImpact.com. I'd like to take a look at this chart in front of you and talk about what the market actually does. How does the market actually move? Well, as you can see, we are on the pound US dollar on the hour time frame. It really doesn't matter what time frame you're on, you're going to find this to be true regardless. If you notice at this point, the market breaks out, had been moving sideways for a while and breaks out to the downside. Trends down a little bit, then it pulls back, kind of moves sideways between these 2 points. Then it breaks out to the downside and trends, then moves sideways, breaks out a little bit, continues to move sideways, breaks up, out, breaks out, moves sideways, breaks down, then moves sideways, has a breakout, then kind of moves sideways, breaks out again, moves sideways, breaks out into a trend, then pulls back, moves sideways, breaks out, moves sideways a little bit, and that's kind of what we see on the chart. So what you will find here, if you go through it, you'll see that the market trends, it breaks out, and it moves sideways, or moves in a counter trend fashion. So those are the three types of movement that the market makes. Now, if you are trading just one system or one strategy, you are basically missing the moves of a counter trend strategy. Let's say that you only have a trend strategy. Well, you may have gotten a trend here and here, possibly here and down to here, but you probably would have missed a lot of the breakouts. And during the sideways market, which is the most time, the sideways market, when the market's moving sideways, that's about 60% of the time in the market you're just sitting on the sidelines. So really, one strategy is not enough if you want to trade a lot, if you want to have the most opportunities to make money. And what we like to do is trade 3 strategies for each market condition, so that when there's a breakout, we catch the breakout. When there's a trend, we get into a trend. And when the market's just moving sideways, going through chop, as it does here, we actually make money during that time as well. And what that allows us to do is have more trades more often and have a more accurate overall system by combining the 3 strategies. Now let's take a look at what this actually looks like on a chart. Now I have arrows and indicators here. Don't worry about those. I'll kind of talk you through them. Basically, the red line and the green lines are our breakout lines, breakout points. Our green and red arrows are when the market is trending, and our yellow right here, or gold arrows, indicate when the market is moving sideways. So what I'd like to do is kind of go through, show you how this particular strategy works. The 3 strategies work together, and it's auto-adaptive. As the market moves, it will auto-adapt to it. So you take this first quick little trend trade. It's around 75 pips. Then we have, as you can see, this yellow right here indicating that the market is going to be moving sideways. So at that point, we would take that up to this next one, which would be 69 pips of profit. Of course, during that same time, we have a trend that was triggered. Our strategy said, okay, a trend is starting. So that trend follows all the way down to this point. And that particular trend is, produced around 320 pips, which is a decent trend on the 4-hour time frame. But remember, we also have this counter trend that occurred from here to here. That's 160 pips, 68 pips, somewhere in there. Now, obviously, we do have this. This is a buy indication. This yellow arrow is a buy indication for our counter trend. And, we took that trade. Unfortunately, that was a losing trade. So that was a loss of around 70 pips on that particular trade. So, not every trade is going to be a winning trade. But being able to, take this breakout trade that occurred right here, to the downside, that added an extra 178 pips to to our account. And so as the market moves, you can actually catch, as we did here, a trend, a counter trend, actually two counter trend trades, a third one that was a loss. You can catch the breakout trades that are very significant. Then you can take the great trend trades. And the trend trades will run all the way down to this point. So overall, we have a 74 pip trend trade, and then we have a 67 pip sideways or counter trend trade. And we have a 169 pip counter trend trade. Then we have a losing counter trend trade. Then we have a trend trade that was extremely profitable at 319 pips. And then we have a very profitable breakout trade. And so when you add up all those trades that occurred over those roughly a day time frame, you're looking at 729 pips total. Now, had we only been trading a trend trade, that 729 pips would have only been 319 pips. So you can see there's an amazing difference when you trade breakouts and you trade a counter trend strategy right along with your trend strategy. So it's really important that if you want to make the most amount of money and you want to be in the market the most, that you will trade 3 different strategies that will get you in trend markets, in breakout markets, and in counter trend markets. Well, that's about it for today. Just wanted to run through that real quick. Until next time, this is Jason Fielder. Good trading.